enough, our opinion about tax havens and generally going offshore is unintentionally influenced by many movies where we could have seen people putting their money in sacks, going on a private jet, and dropping that money to a Cayman bank. But in today's video, we're going to debunk some of those myths and explain to you what is actually a tax haven and how you can use it to save your taxes, but also what are rules and regulations imposed nowadays to prevent tax evasion by using those tax havens. Hi, I'm Jovana from Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and their families obtain multiple residence and passport, change their lifestyle, and reduce their tax bill and protect their wealth. And what I can tell you as someone who has been working with many of our clients who have seen many Nomad Capitalist live attendees and has constantly been in touch with many of our viewers is that tax haven often has very negative connotation. And people are sometimes very ashamed or afraid using some of low tax jurisdictions in order to reduce their tax bill. And they're really ashamed of what their community is going to tell them about that. And as I said in my intro, that is mostly influenced by long stories about why that is bad and some previous historical events when that was possible to use those tax havens to avoid paying taxes in your home country. But let me start first from clarifying what is a tax haven. So tax haven is a place or a jurisdiction that has either very low or zero headline tax rate. This can help you personally and your company reduce the tax bill. Some countries that do not necessarily have a headline tax rate of 0 or 1 or 2% can also serve as tax haven if used properly. So it can also serve to you to reduce your personal or corporate tax bill. Those are mostly territorial countries or countries with some sort of exemptions. And we spoke about those countries on this and our main channel many times. But when it comes to tax haven, besides having a low tax rate, they usually have high level of financial confidentiality. So financial confidentiality can be seen in multiple things. So whether a country requires for a shareholder to be stated on incorporation documents, are they looking for an ultimate beneficial owner? And so on. And in most of the cases, they also have very good asset protection laws, especially when it comes to trusts or holding companies. They are not going to be places that will easily give out information about you or what is held in the trust or a holding company to any other country. So because of those three factors, many people see those places as places where you can effectively hide your money and no one will know about that. But that is not necessarily correct. Banking secrecy and using tax havens as a place to hide your money from your home country doesn't exist nowadays. First of all, when it comes to banking secrecy, there are so many rules and regulations about that. United States citizens have FATCA rules, which basically are imposed to almost every single bank in the world. So if you want to work with US citizens, if you want money coming from US citizens, or US citizens as ultimate beneficial owners of certain companies, you better comply to our rules. You better report that back to us. Also, besides FATCA, for everyone, pretty much everyone else around the world, there is something that is called CRS, or Common Reporting Standard. So it is seen when you're filling up forms to open a bank account. They will ask you for your tax ID and the country of tax residence, and they report information back to your country of tax residence. So banking secrecy is not possible. It might take them a long time to figure out. It might take them a couple of years for all of that communication, but technically is not possible. Obviously, there are countries that are not part of CRS. They're not going to report, but it is on you personally to report having an account in those countries, and those countries are usually not classified as tax havens. Besides that, there is a number of other rules related to companies per se that are trying to prevent using low tax jurisdictions in order to avoid taxes and hide your money or corporate money in those places. So some of those rules you probably heard nowadays. There is a huge discussion about global minimum tax. So that is coming in place in many countries. Many tax havens complied to this. We saw Bermuda now introducing global minimum taxes and putting a regulation for that in place. So they are gonna share those info. They are gonna ask multinational companies that are incorporated there to pay those taxes or pay taxes somewhere else. But even before that, again, that is not implemented worldwide. But even before that, we had controlled foreign corporation rules that apply to much smaller companies compared to global minimum taxes. So those rules practically are imagined to be directed towards companies that are incorporated in tax havens. So if a shareholder of those companies lives in a place with that it has CFC rules and higher taxes, there is a number of different criteria that he needs to meet personally in order for his company not to be taxed at high tax place. Or if he doesn't meet that, obviously that company might be taxed. Or also, especially those rules are related to some connected entities and where the taxes are going to be paid and what kind of exemptions that's going to have. So that's a whole separate topic, and we have a video on our main channel about that. But those rules are highly complex. They are different country to country. They do have a couple of things that are very similar, but they really need to be taken into account, especially if you have operating businesses on multiple jurisdictions. Also, what was very common and still nowadays is the use of fiduciary directors. Many people use those kind of directorship because they live in high tax countries. So they don't want to be seen as managing their operating companies. They would put a fiduciary director where the company is incorporated who will manage on their behalf. But again, there are additional regulations around that. And also in most cases, banks do want to see who the ultimate beneficial owner is in order to open those accounts. Also, things as numbered bank accounts that existed before where you don't know who is the user, you just have a number. Those things are long dead, so that doesn't exist anymore. So as you can see, there is a number of rules and regulations put in place to prevent money laundering to tax havens, tax evasion, and basically hiding money in some of the banks in those places. So that perception, that very old-fashioned perception that is still possible, is not applicable anymore. It's just a matter of how fast certain countries can work and how fast tax authorities of certain countries work in order to figure that out if someone is doing it. So if you're interested in using tax havens, but in order to legally reduce your tax bill, especially your corporate bill, you also need to understand what options do you have. So there are a couple of places today that are considered as tax haven. Those are British Virgin Islands, Cayman Islands, Cook Islands, St. Kitts and Nevis, Singapore, Hong Kong, Malta, Bermuda, Ireland, and a couple other places. But if you do want effectively to use a tax haven, you also need to understand what those places are good for, because as we are constantly saying in many of our videos, what works for you might not work for someone else, and not all the places are equally good for everyone. So for example, St. Kitts and Nevis and Cook Islands, tax havens that are the best for asset protection. BVI, probably very good option for operating companies. Obviously, we would always advise having operating companies that do not have super high profits. So some medium-sized companies, obviously putting below that additional corporate structure that would facilitate you making payments, because with BVI company, you really don't have many options. BVI is also good for holding certain assets and as a possible jurisdiction to hold assets that you will later contribute to. For example, your Cook Island Trust. Brokerage accounts can be held by BVI companies. So if you have, for example, Interactive Brokers in the US, those can be held by BVI companies and then to contribute to, for example, Cook Island Trust or St. Kitts and Nevis Trust. Singapore is one of the countries that doesn't have a headline tax of 0%, but it is a territorial tax country, which means that everything that you earn outside of Singapore is not going to be taxable in Singapore. So it's going to be taxed in some other places. So if you have a Singaporean-based company, but you're not physically doing any work, you don't have employees in Singapore, you don't have offices, you don't have physical presence in Singapore or Singaporean clients, anything that you earn around the world is not going to be taxable. So again, tax havens are not just those countries that do have a big zero in their tax code, but some countries as Singapore, as Hong Kong, that can serve as that. Specifically when you're talking about personal taxes, the number of those countries is higher because many countries do have different exemptions that allows you to really have very low tax rate in those places. So if you like to move your business affairs offshore, or you personally to move to another country in order to reduce your taxes, what you should know is that there is a tax haven for everyone. It might not be one of those countries that have a big zero tax headline tax, but there might be some other places that just for you will work as tax haven. And if you're not sure which of those places you should consider for yourself, our Nomad team is going to be happy to help you.